Welcome to today's training. And today we want to look at maximizing return on investment. As a real estate developer, it is our responsibility to ensure that our investors get maximum return on investment. But the investors themselves, they have some responsibility, they have some work to do. So let us say that you guys are consultants now. It's not let us say you are all consultants, right? Going out telling people come and buy property. For most people, their major concern is how they will get return on investment. As we discussed before, most of our prospective clients, most of them have homes where they are already living. I can tell you for sure that if for those who have invested in our property in Kagini, most of my friends who have invested there, they are investing there for investment purpose. They are buying into the estate for investment purpose. Most of them, they are not going to live there. Some of them already have, most of them already have their own homes. So they are keen into the project for investment purpose. So today we want to look at how somebody who has made up his mind that he wants to use real estate to build wealth, how can the person get maximum return on investment? Okay, so what is return on investment? Return on investment is a financial metric used to evaluate the probability, the profitability of an investment property. In other words, it tells a real estate investor how much money he or she have gained or lost in relation to initial amount the person invested. Maximizing your return on investment (ROI) in real estate involves a combination of strategic planning, smart financial decisions, and ongoing property management. Below are the strategies to maximize return on investment. So what this slide is practically trying to tell us is what? Return on investment is a matrix. If you are doing, whether it's real estate investment or any other form of investment, let's say you are trading stock, for example, you understand, you have to measure what? Your return. This is the amount of money you put. Did you make gain or loss? How did you, if you made gain, what is the percentage? If you lost money, what is the percentage? It is very, very important because that is what will guide you to know what you are doing. Do you understand me? And this becomes more important, especially when you are using borrowed funds to work. For example, you collected a loan that you are to pay 20% per annum to invest in real estate. If you don't know whether what you are doing is working, you will be in trouble. Do you understand? Even for us as a developer, before we launch any project, we try to estimate what is the expected return on investment on this project, and that informs our decision in anything we are doing. So what we are to look at here today is how do we measure return on investment, either as a real estate developer or just somebody who want to invest in real estate. You want to use real estate as a vehicle to build wealth. Strategies to use to maximize return on investment. Number one is strategic property selection. So under strategic property selection, you need to do what? Market research. Thoroughly research the market trends, economic indicators, and demographic data. Understand demand and supply dynamics, rental yields, prevailing rates in the area. So what we are trying to say here is that you want to set out to begin to invest in real estate. How you select your property is very, very important. And under selecting of property, we have discussed this over and over and over again. Carrying out proper research. You don't just go wake up today, you say people are buying property, you want to go and buy property without doing research. Do you understand me? Because if you want to buy a house, for example, because I have said this before, for any money you are using in a business, there's what they call what? Cost of funds. Do you agree with me? There is what they call cost of funds. Even if that money is your own, you consider that the money comes with what? A cost. Because if ordinarily, if you have gone to bank to borrow money to do that business, you will be charged interest rate. So it is very, very important that you carry out research. Let's say you are buying a house, for example, for rent. You need to understand, if I buy this house at, let's say, 50 million, for example, how much rent will I be getting from the house yearly? That is what they mean by what? Carrying out market research. There are places that you take money, you go and buy a house. If you consider that you borrow the money from a bank, you buy a house there, the rent will not even be able to take care of the interest rate you are expected to pay. And don't forget that, for example, you remember when we discussed about rental income, you understand me? Don't forget that what? There are other costs that come when you put up a house for rent. Do you understand me? There are running costs that come with, renting a house. So you need to do what? Carry out research. Then economic indicators. Do we understand what we mean by economic indicators? We don't understand. Economic indicators is just talking about what is happening in the economy generally. Here we need to begin to think about what? Interest rate. Because as I said, any money you are using for businesses, it has a cost. So economic indicators is just talking where is the economy going? Where is money flowing into? Do you understand me? Whatever you are doing, you remember the world is now a global village. I give you an example. You see this crisis that is happening in the Middle East. Do you people agree that it's affecting our economy? When the crisis escalates, the price of what? Oil will go up. That's where you hear people, they begin to increase petrol price. Once they increase the cost of petrol, every other thing will go up, because what? Cost of transport will go up. Somebody who is bringing a yam from Benue, if the transport cost go up, he or she will add the cost of transportation in the cost of the yam, and he will give you the price. So that's what they mean by economic indicators. Interest rate. What is prevailing CBN interest rate? Where is the direction? Where is government putting money? I'll give you an example. Right now, some of the contractors who are working for federal government, for some time now, they have not been paid. And the thing is affecting businesses generally. Do you understand me? Those are what they mean by economic indicators. Where are government putting money? What is the interest rate? What is government fund? What is CBN policy? Do you understand? FX. What is a dollar to naira rate? All those things, that's what they mean by economic indicators. Then demographic data. Demographic data is talking about the age of people. What is in demand now? Is it house for elderly people? Is it house for young people? That is what they mean by demographic data. What is the population growth rate? All these things, they play a role in what? In helping you to select the type of property that you should invest in. Then location, location, location. This is paramount. Select areas with strong job opportunities, growing population, good schools, low crime rates, and improving infrastructure. We have discussed this. I think there was even a time we took location as a topic. Then look for undervalued properties. Look at properties that are undervalued or distressed. Please, we discuss this some other time also. When you are investing in real estate, buy property from a distressed seller, not a distressed property. They are two different things. Don't go and buy a house that if you conduct integrity test on it, it will not pass. That one, you are just putting money inside the drain. Or you go and buy a house that the cost of doing renovation, it will, even you put a lot of money in it, it will still, the building will still not come out well. It may even be better to demolish the house and start all over again. Please look, what we are saying here is a property that you put small money. It may just be painting and small finishing work, and the house is okay to go. Please always remember, as we discussed before, in real estate, you make more money when you are buying the property than when you are selling it. That is why they are saying look for undervalued properties. Distress seller, not distress property. Do you understand me?
Yes, sir.
Okay. Then target market. Know who your real tenants or buyers are. If you are selecting a property, for example, you need to know who you are targeting. For example, families. If you are building a house for a family, what will interest them is what? What is the first consideration for people who have enough rooms? Yes, that is already considered as a family. What do you think is the most important thing for them? Eh? School, where their children will go to school. Eh? That is the first consideration. Anybody that has family that is looking to buy a new home where their children will go to school will be their what? Their first consideration. They don't want to, spend the whole 2 hours or 3 hours on the road that they are taking children to school. Madam, I expected if you answer this better. Then for young people, what is their concern? Their concern is places that are close to their place of work. And you find this what? In urban settlement. They are looking for places that are close to their place of work and the places of entertainment. I think some of you used to go and watch cinema.
Yes, sir.
I don't know whether they are very good cinema in Nyanya Maraba also. So young people, their interest will be what? Houses, smaller houses that are in urban areas where it's close to their place of work, and they can, places of entertainment. They can go to, cinema, they can go to watch movies and stuff. They want to go for shopping, they can go easily. They want to go and buy shawarma and all those kind of things. Those things you find them where? In urban areas. So those are, some of the things you know. You should know all the people you are, who are your target market, the property you are investing, who do you have in mind. Then property type. Consider return on investment potential of different property types: commercial, residential, or industrial. These are also things that you should look into. The property you are trying to invest in, you need to weigh all the options. If I invest in residential property, in fact, you need to do a simulation. You understand? If I put this amount of money in a residential home, what is the rent? If I put in commercial property, what is the rent? If it is industrial property, what is the rent? So we have discussed strategic property selection as one of the strategy to maximize return on investment. Next slide. So the next thing you need to think about is value adding strategies. One, strategic renovation and upgrade. Focus on cost effective improvement that significantly boost value and appeal. For land, consider fencing, gatehouse and access road improvement. So what we are trying to say is this: after you have selected a very good property, the next thing you need to do is to do what? Add value. As I told you people before, once you buy a property, for example, land, I'm talking of empty land now. The moment you put a block that you are fencing it, or just doing any form of improvement on it, it begins to add in value. Do you understand? So as investor, you shouldn't just stop at buying the property and just put it up for sale. You buy the property, you can do some things on your own to add value to it. Do you understand me? Like some people that bought land in our estate in Kagini, somebody have done build his own to DPC level. Do you understand? There's no way the value of his own will still be the same thing with somebody who still bought empty plot. Do you understand me? So if it is a house that is already existing, it might just be, simple painting the outside, clearing the place. You may do some improvement on the external, that is hard finishing on the external, maybe interlock, or you plant flowers, things that will just make the building to be more appealing. Do you understand? These things add value and will help you. Either you want to rent the property out or you want to sell it, you sell faster if you add value. Then preventive maintenance. Regular maintenance prevents minor issues from becoming costly problem, preserving property value. When I go around, sometimes I see people houses. A house is just like road. If you take a typical road, all the potholes you are seeing on our roads now, some of them became so bad because when the problem started gradually, nobody paid attention to it. You see do you know how pothole used to develop? There will be one small spot. If it is not patched, it becomes a place for water to start going inside the road. And because some of the material that are used to do the road, like laterite and all that, the moment they soak water, the road begin to deteriorate more and more. I have never seen a city like Calabar. 2015, when I went to Calabar, they have a very good maintenance culture. In fact, what the government then did was that they had a kind of concession. They concession the road repair. So once there is any small pothole, they will work in the night. Once there is any small pothole, you see them before daybreak, they have come and fix it. Just small maintenance team like this, and everything there is working. Even their street light, they are under concession. And they work mostly in night so that they don't disturb people during the daytime. And because of that, they are road. So also is in building. You see, sometimes when a building is not well maintained, the problem will start from one place. There's small water leakage somewhere. It's not attended to. It begins to stain the wall. The paint will begin to peel. The wall begins to crack. Sometimes you take your car for services. That's what we are saying. So house also, as you prevent some maintenance to prevent bad thing from degenerating or something undesirable happening to the building. Then property condition. A well-maintained property attracts better tenants and minimizes vacancies, which directly impacts on your income. When we discuss about long-term property rental, we saw the importance of ensuring that you don't have vacancy. Do you understand me? Because when the house is vacant, you are not making money out of it, and other running costs, they are running. Do you understand me? Like the fixed charges for electricity and water, all those things. Whether somebody is staying on the house or not, there's a fixed charge you have to pay. They call it service charge. Whether you use light or you didn't use, they will they will charge you. So number two strategy is adding value, add value to the property. Okay, financial optimization. Why buying than when selling? So here we are discussing about what? When you are buying the property in the first place, for you to optimize, maximize your return on investment, you have to buy right. Do you understand me? I see sometimes I go online, I see what some people used to post on the price tag they used to put on property, and I really personally feel that some of those prices, some of those houses, they are overpriced. If you go in and buy those kind of property on the face value they put on it without doing proper negotiation, you will run into some problem. Do you understand me? So for you to maximize your return on investment property, you need to be a very, very good negotiator. Do you understand me? Yes, sir. You need to be a very, very good negotiator. You don't just buy property on what they tell you. You need to, know how to negotiate very, very well. In fact, whether you are buying, even when you now want to sell, you should be able to, negotiate very well. Then control costs. Negotiate with contractors, buy materials in bulk, and seek deals or financing. Do you understand me? If you take, for example, our Kagini project, nobody supplies us cement from roadside. We lift our cement directly from Obadiana cement plant. That is what they mean by what? Buying bulk. The minimum consignment we can take at any time is 600 bags. In most cases, it's 900 bags. So if you are investing in real estate, you may, even though you are not operating at our scale as a developer, even if it's an individual, try to buy your material in bulk. Because if you are buying in piecemeal, the implication is that you are going to be spending so much on transportation. That's why they are discussing what we mean by, trying to control costs. You understand? Then negotiate very well with contractors that are working for you. Maybe you bought a house, you want to renovate it and stuff like that. You should be able to, monitor everything. Do you understand me? Monitor all the stages of work to ensure that you don't what? You don't overpay or you don't lose your money. Leverage, leverage and financing. Understand how to use leverage, borrowed money like mortgage, to amplify your return. Remember, borrowed funds come with interest. I mentioned this before. Do you understand me? So you should be able to look at, if you have a project to do as a real estate investor, you should be able to look at all the options that you can use to raise money. Do you go for bank loan? Do you go for mortgage? Do you borrow from family and friends? Stuff like that. That's what they mean by what? Leverage and financing. Do you join with somebody who has, instead of going to bank to borrow money, okay, you see a property that you feel that the high return on the investment is possible, you can team up with somebody and two of you join hands to do the project. Instead of running around to go to bank, they will ask you for collateral, they will ask for your the things they used to ask. When you go to borrow money in bank in Nigeria, sometimes they will ask for your intestine. So instead of all that, that's what they mean by leverage. You understand? But you weigh all the options and look at the ones that are best suited for you. So you should be able to weigh all the financial options available to you. Then estimate return on investment correctly. Use method like cost method, that is total gain divided by total cost, or the out-of-pocket method, current equity divided by market value, to assess profitability. As I said at the beginning, even before you go in, you should be able to have an estimate. Something should guide you that this property I'm investing in will be profitable. Then tax benefit, leverage real estate tax advantages such as depreciation deductions. These are things that you can use to optimize your what? Finances. Then reinvest profit. Example, acquiring new properties, upgrading existing ones can help expand your portfolio and diversify your income stream. What we are saying here is not just when you start investing, the first profit, you begin to think of to go on holiday, or begin to think of to go and buy a Gucci bag, or begin to buy a hair that ordinarily that will cost 1 million. So if you start real estate investment, you are using it to build wealth. Part of the things you can do is to reinvest your profit, especially at the beginning. When you have diversified your portfolio, you have a very large portfolio, you can be doing all those things with ease. There's the amount of money you will now take out of the business and you will not feel it. But at the beginning, always try to reinvest your profit into the business. Next slide. Okay, effective property management. Please remember, we also discuss property management as a topic when we are looking at how to use real estate, how to make money from real estate. So professional property management, this is key. If you lack the time or expertise, consider hiring a professional property management service. What we are saying here is that number 4, now how you can, strategy you can use to optimize your return in investment. Effective property management. How you manage your property, especially house that has already been built. It is very, very important, and it will go a long way on how you maximize your return on investment. Optimize rental income. Conduct thorough market research to set competitive yet profitable rental prices. Regularly review and adjust rents to align with market rates. What we are trying to say here is that you should be competitive in your pricing. For example, you have a house or a commercial property for rent. You should be competitive. Don't charge too high and don't charge too low. How do you do this? Always know what is going on. One of the platforms which I have discussed earlier that you can use to achieve all this is a Nigerian Property Center. If you go there, if you go to their platform, for almost everywhere in Nigeria, they have data. You understand? They have properties that are listed for rent, for buy, and even Airbnb, and empty plots of land. So you can use it as a tool to keep yourself up to date. Do you understand me? I visit that site almost on daily basis. Even sometimes I just go to a city, I try to find out what is happening in real estate market in that place. If you want to really do well, you want to maximize return on investment, you need to be up to date. And like that kind of online platform is one of the means through which you can keep yourself abreast of what is happening in the market. If you put the rent for your house too high, you will not get tenants. If you put it too low, you'll be shooting yourself on the leg. So try to be competitive. That's what we are trying to say here. Then reduce vacancy rate. We have discussed this briefly. A well-maintained and managed property attracts tenants quickly, reducing vacancy periods and ensuring consistent cash flow. Conduct proper tenant screening. we discuss this sometimes in our lecture, the type of people you are bringing into your house, especially for house that is for rent. It is very, very important. We saw when we discuss long-term property how difficult it is to evict tenants. Some places is a whole lot of headache, and some people will just purposely come to your house. They don't want to pay rent. They want to take the case to court so that it will be going what? Adjournment. Eh? I think there was one man I met. The people, they are into their real estate consultants. That's the property managers. So I was discussing with the guy. He told me that one of their houses in a highbrow area in my town here, for 10 years, somebody is living the house. He has not paid rent. The case is in court. Eh? So you can see that if you if you borrowed money to invest in that kind of property and you have that kind of tenant, you're already in serious trouble. Eh? So tenant screening is very, very important if you want to maximize return on your investment. Do you understand me? And one of the ways you can, use to find out is to, just as if you are employing somebody, ask for referees. Ask the person where he has lived before. Can he give you a phone number of his or her previous landlord? But in most cases, for you to even, it's safer to use property managers. Do you understand me? They have the capacity to, screen tenants very, maintain good relationship with tenants, properly address maintenance requests, and foster good relationship with tenants to encourage longer stays. While some tenants also give problem, some landlords also are interested in collecting rent. They are just waiting for the next rent to be due. You are calling them that, come, there is problem in the house. They are not ready to attend to it. That one also is not good. If you really want to make the best out of your investment, you should pay attention to things like this. You should have good relationship with your tenants and address their concern. It's not good that somebody is paying you for a house, and when that person go to bed in the night, it's raining, the roof is leaking. You'll be shifting bed from one side to other. So it's very, very important that you maintain good relationships so that people can stay on the house for next line. So number 5 strategy is to have what? Long-term vision and sustainability. In the first place, before you start, define your investment goal. Clearly define your short-term and long-term investment goal. If you want to maximize return on your investment, you need to set a goal that this is what I want to achieve. You understand me? What is your goal in the first place in investing in real estate? What do you set out to achieve? As stated here, goal could be short term, it could be long term. For example, you can say, okay, in the next 5 years, I want to own 50 houses that I put on Airbnb in Abuja. It's a goal. And you need to start what? Working towards it. Market timing and trend. Understand estate market cycles, growth, stagnation, and correction. This will help you to buy low and sell high, or maximize rental yield during peak demands. Do you understand me? What we are trying to say here is that you should know what is happening in the market. You should know the type of houses that are trending now. Do you understand me? What is trending now in terms of houses? What are the modern facilities you can put in a home to attract what? Tenants, or attract buyer in case you are selling. Then diversify your portfolio. Spread investment across different property types, locations, and market segments to reduce risk and capitalize on various opportunities. If you look at our own strategy, we are already doing that. That our enemy is residential and the one in Gwarimpa is commercial is not an accident. It's our own strategy of diversification. Do you understand? Yes, sir. If there is high demand for residential houses, we are there. If there is high demand for commercial, it's there. It's a strategy. And we, as the highest management level, we sat down, looked at it gave it a serious thought process and came up with that methodology. Otherwise, we could have made the two projects either residential or commercial, but that is our own strategy for diversification. Then have a exit strategy. Have a well-defined exit strategy for each investment, e.g., selling, refinancing, converting to rents. For each investment you are going into, you should have a strategy on how you are going to exit. Do you understand me? Like if you take for our commercial property in Gwarimpa, we have a plan for it on how we are going to exit the property. When we mean exit here, we mean, okay, there is a time we want to sell, or we are not going to sell, or we are going to keep some for ourselves for rental purposes. That is what they mean by what? Exit strategy. You don't just buy a property and say, okay, and leave it to whatever happens in the market. You should have a plan on how you are going to exit. If you are buying a property, you can buy a property, for example, and say, okay, I'll collect rent on this property for 5 years. After that, I want to sell it when the property, the value has appreciated and you have also collected rent. You sell and move on to another property. Do you understand? Then networking, build relationship with real estate agents, contractors, other investors, and financial advisors. Their insights and connection can lead to lucrative opportunities. Importance of networking cannot be overemphasized. If you want to maximize return on investment in real estate, you have to network. Sometimes people, neglect real estate agents or treat them anyhow. In my own opinion, it's not supposed to be like that. Because sometimes they bring very good deals to you. Do you understand me? They will bring, because they are always on the market. They know property that are what? Remember we discussed undervalue. They know the market conditions and they know properties that are undervalued. They will bring those kind of deals to you. And if you have the capacity, you can cash it on it and make maximum return on investment. So this is where we draw the curtain today on how to maximize your return on real estate investment. Investment opportunity with the mark. So we have two projects ongoing. One is residential real estate in Tagini, Abuja, and the other one is a commercial property in Gwarimpa, the Mark Mall. So if you are interested in any of these property, please visit our website or contact the number on the screen. Thank you for making time to watch this video.